Welcome to Business Live. I'm Mark Croskery. In BL tonight, first up, we got General Insurance Company, Key Insurance Company. They're going to consider a rights issue to ordinary shareholders. Now, you would recall that Key Insurance is now majority owned by a very large conglomerate. They're also having a very good year. One would say they're pretty much COVID proof. That is Grace Kennedy having a very good year, with their GK or Grace Patties, their food division doing very well, as well as their remittance division is pretty much holding up. So for Key Insurance now, especially with Grace Kennedy having 65%, or more issued ordinary shares, the board of directors is considering rights issue. It's scheduled for September 8th. Next up, we got Mayberry Jamaican Equities here, similar to QWI Investments, a few other companies, Epley Caribbean Property Fund, continued trend of just buying up these shares by connected parties, insiders. So in this case here, purchasing a total 74,310 shares on August 28th, August 31st. Always great to see, Mayberry Jamaican Equities, ticker symbol MJE in this case here. Now, Kingston Wharves, similarly, trading the shares, but just on the other, side of the spectrum here, a sale. Not a large sale, not a small, just somewhere in between. 570,000 shares here sold on August 27th, 2020 by a connected party. Now, in big overseas markets, we're going to jump over to Asia this time. Yum Brands here, but this is, let's say a different company, Yum China. And, we always say to shareholders, or let's say business people, you can do this. You see this so much now with companies, SPACs or SPVs, or just holding companies, groups. Sometimes they create subsidiaries, different companies, and raise some capital. Sometimes it works out, sometimes it doesn't, but it could really create more shareholder value. Last up, and just like, Zoom video communications that we've been talking about, and a few other, very interesting kind of pivoting stocks. We spoke about the data analytics firm as well too. Now, DocuSign continue to do well. Even analysts raising price targets like Morgan Stanley, raising the price target from say 180, 190 up to 260, 270 US per share. So a strong second quarter here by DocuSign. Everybody knows DocuSign. You're doing your PDF files, you're doing, contracts, and you're doing electronic signatures. So especially during COVID right now and the pandemic, a lot of people, you're not going to your lawyer's office. You might not be going to an office overall. So you're putting in electronic secure signatures, to get things done, get deals done. So DocuSign really exploding, just anything with technology now, especially during COVID, doing very well. So a lot of analysts coming out and raising the price target overall. In terms of earnings and revenues, revenues up, double digit, 45% or more in terms of revenue, year over year for the quarter. So they had really good results there. The stock now is around 229. So probably what Morgan Stanley is saying is 10% upside or more. In terms of earnings, talk about a blowout, 17 cents per share. Core analyst estimates thought that, they were going to come out at 7 cents. So that is more than double. So you're seeing now who is really doing well. You saw Walmart with the e-commerce. You saw Zoom video communications just blow it out, up over 400% and so forth. But now you're seeing DocuSign. So any company that's doing this can fit into this niche is doing very well despite COVID. I'm Mark Croskery. This is Business Live.